SoFi and stock market investors, welcome back to the channel. My name is Jason. In today's video, I want to drop some truth bombs on you guys about SoFi stock. There's a lot of crazy stuff going on all over the world right now, and it is going to affect SoFi stock whether we like it or not. If we take a look at the stock right now, take a look at your screen. We've been trading in that range over the last month between bouncing up and down from like 1950 down to 1776, back up to about 1925, back down to exactly 1776. So we're trading in this range. And I think a lot of that has to do with the broader scope of where we're at as a global economy. It's also trading below both the 50-day SMA and the 200-day SMA. It's not a good situation until we break these resistant levels of, $23, $22.50, and then the $25.70, signaling long-term upward trajectory from this long-term downward momentum. I think we're going to be stuck in this range for a little while. And a lot of that has to do with the U.S.-Iran war. Donald Trump has just sent 5,000 Marines over to the Middle East and another warship. The world's oil supply is being strangled right now, and that's going to send ripple effects across the entire globe. Several countries who have debt that they're not going to be able to repay, and we could see a domino effect, especially in these European banks, which will bleed into the American economy and overall global economies. And as gas prices go up, other prices are going to start to go up, and then people are going to have less money in their 401ks as stocks come down, less spending power. It's not a good situation at all whatsoever. And the longer this goes on, the more and more concerned I'm becoming. And now what I'm doing, I'm going to start selling a lot of covered calls in that $19.50 to $20 range over the next couple of weeks and months, because I need to get some of my premium back of the money I spent on SoFi stock, because I'm really concerned about what's happening in the Middle East, and I'm really concerned about our American Marines that are going over there. 5,000 Marines are being deployed. The death toll is already at 13 right now, and it's only going to get bigger. And people are dying right now, and I hate everything about it. This isn't a political video, but this is just the reality of the situation we're living in right now. And 5,000 Marines are going there, and I'm going to go out on a limb and say 5,000 of them will not be coming back. And that's just horrible for Americans and America in general. And I think financials especially are going to be affected. Pentagon is moving additional Marines, warships to the Middle East, and some of these pictures from the Wall Street Journal are just horrendous all over the Middle East, from Israel to Afghanistan. It's really, really sad what's going on in the world right now. And other countries like the UK are getting involved. And this is going to start to spill out to be a global conflict. And that's not going to be good for financials and the stock market moving forward. There's nothing wrong with SoFi, the company. But I do think these macroeconomics that are going to be going on for the foreseeable future are not going to be good for stocks in general. If we take a look right now, this is the XLF. This is the financials sector from State Street Financial. This is their ETF. It's down 11% this year. And then here is some of the other charts. The KBW NASDAQ Bank Index down 12%. The S&P 500 financials down 12%, 11.35% year to date. State Street Financial Select Sector Spider ETF down 11%. And we could be just getting started with this overall sell-off in financials. The stock market is always forward-looking, and they are pricing in a stranglehold on banks. It's been awful for SoFi stock. Year to date, we're down 35%. Even a stock like Hood, that's very crypto related, down 36% year to date. And even a more stable company, Bank of America, just to show you guys, is down nearly 17% year to date. From peak to trough, it's down, closing on 18%. So I'm nervous about what could happen with SoFi stock in the short term. If you're in it for the long term, just ride it out. We will come through the other side bigger and better than ever. I think the numbers overall will be good for SoFi stock. If we take a look at some of the highlights from the last earnings report, exceptional. Record revenue reaching $1 billion, up 37% year over year. So overall, I'm not worried about the company. I am worried about the overall stock market. If we take a look, the Dow Jones year to date closing in on down 4%. The S&P 500 year to date, it's not even the middle of March yet, guys, is down 3.3%. The Nasdaq Composite year to date down almost 5%. We're not even through Q1. If we go down 5% per quarter for this year, all these indexes are going to be down between 17 and 20 percent over the year. So you have to be very cautious about how you deploy your money. I'm deploying my money whenever our stock goes down 10%. And then when I buy, it goes down another 10%, I'll buy more. But I'm in no hurry to be buying stocks. I'm buying very cautiously right now. And I just wanted to express my caution to you guys and let you know what I'm doing and what I'm seeing in the markets right now. This war with Iran is stupid. There's no point of us being there. And we are all going to see the effects of it in our pockets. Straight up. We're already seeing it at the gas pumps. And that's just the start. I'm sorry to be the bearer of bad news, guys, but that's kind of just the way I see it. The Russell is actually performing better than the other indexes, down a little bit over 1%. The New York Stock Exchange Composite down about 1% year to date, trading pretty flat. But back to SoFi, I think the company's doing great. GAAP net income, $174 million, 9 quarters in a row of profitability. It doesn't get much better than that, SoFi investor. So I love what they're doing. Earnings per share, diluted EPS is 13 cents, beating analyst estimates of 11 cents. If we could do that or better in the next 4 quarters for 2026, because remember, this was ending December 31st of last year. So 13 cents, 26 cents, 52 cents. I think between 55 and 60 cents is doable this year in earnings per share for us. Adjusted EBITDA rose 60% year over year to a record $318 million with a 31% margin. The numbers are fantastic. But will they continue to be fantastic if this war goes on and Americans keep dying, gas prices keep going up? They release some gas reserves, but you can only do that so much. It's putting a stranglehold not only on the American economy, but the global economy. And we live in a global economy right now. We're not as isolated as we were 100 years ago. So it's a huge area of concern for me moving forward. And I think all price targets are off until this war is wrapped up. And honestly, you can't believe anything out of this administration's mouth. And I'm a moderate. I'm not a Democrat or a Republican. I just know bullshit when I see it. And I think we're getting a lot of bullshit from this administration right now on the truth about what's happening and the plan and how long we're going to be there for. I think it's going to be longer than people think. And then we're going to start to see a lot of these smaller countries can't survive with these exuberant gas prices and oil prices that we're going to be seeing if this war continues, right? Member and product growth, 1 million new members in Q4. Unbelievable. That's an unbelievable number. Total 13.7 million. We'll be hitting by the end of this year. What are we going to close in at, guys? 16, 17, maybe 18 million new members. And look, it's an exciting time to be a SoFi investor. But in the short term, if this war and the economy starts to deteriorate, I could see SoFi under $15 per share pretty easily. maybe even $12. And if shit gets really bad, it could go back to $10 per share. But I'm just being transparent for you guys. I know a lot of these SoFi videos are like 5x, 10x, what they could potentially do. But we're in a bad situation right now with this war, and I don't see it ending anytime soon. Hopefully I'm wrong about that. Financial services net revenue grew 78% year over year to $457 million. Lending net revenue up 15% year over year to $486.5 million. Total loan originations hit a record $10.5 billion, up 46%. The tech platform revenue 19% up year over year to $122 million. The amount of revenue streams this company has is remarkable. I love this company, and I don't want to sell my shares right now, but that's why I'm going to sell a lot of cover calls close to the money, 1 week out, 2 weeks out, 3 weeks out, 4 weeks out. That's how you make your most money over a length of a year, but we'll see how it all shakes out. Crypto launch, the MasterCard deal that just went through with the stable coin. There's a lot of, and their EPS, I estimated around 60 cents too. Makes total sense. Projects, approximately $4.66 billion in adjusted net revenue. I mean, the company is firing on all cylinders. But that doesn't mean the stock can't and won't go lower. And honestly, I think $15 is probably the next leg down. If we start scaling up this war, sending 5,000 Marines to the Middle East is heartbreaking to me. I come from a family. My uncle was in the service. My grandfather was in the service. We come from a family of military service. And it's, I wouldn't want to be sending my children to die for Donald Trump. Whether how you like his politics or you don't, but I think one American dying over in Iran is too many. But that's just my thoughts on this matter. My thoughts on the totality of what's going on in the stock market in general. Be careful out there, guys. And we could see some downturns in the stock market. I think the S&P 500 could be going down 10-15% this year. We're already closing in on 5%. So I don't think 15% is out of the realm of possibility, especially if this escalates. I'm hoping that, cool minds prevail and we get some de-escalation and some peace. It needs to happen. Don't forget to like and subscribe. Peace.